My mother stood in her kitchen the night of my father's estate meeting and told me, with genuine tears in her eyes, that there was simply nothing left. She said the accounts had been drawn down during his illness. Eater. She said the medical bills had taken most of it. She said she was sorry, but the inheritance my father had always talked about, the one he had mentioned at every holiday, the one he had referenced in the letter he left each of us, was simply gone. I drove home from that meeting with 2 hours of road ahead of me, and my father's letter folded in my coat pocket. Yufkin. He had written it by hand, in the careful cursive he used when something mattered. He wrote that he had set aside a portion of his estate equally for each of his daughters. He wrote that he was proud of us both. He wrote that he hoped what he left would give us a foundation. My sister Patrice got a check for $61,000 3 weeks after that meeting. I know because the IRS told me, not intentionally, not in a phone call or a letter addressed to me personally. The IRS told me the way the IRS always tells the truth, through a document. A gift tax return filed by my mother, reported to the federal government, email, and obtained through the estate process, 17 months later, when I finally started asking the right questions. My mother had given Patrice $61, from my father's estate, and filed a gift tax return to protect herself legally. She had reported it to the government. She just hadn't reported it to me. I want to tell you how I found it. Ipe. But first I have to tell you who we were before any of this happened. My name is Loretta Sims. I am 52 years old, and I live in Memphis, Tennessee, where I have worked for the past 21 years as a forensic accountant specializing in estate fraud and financial elder abuse. I did not choose that specialty by accident. I chose it because I grew up watching money move strangely through my family, and I wanted to understand the mechanics of how that happened. I understand them now. Here. My parents, Chester and Gloria Sims, raised me and my sister Patrice in a 3-bedroom house in a suburb of Nashville. My father worked in municipal finance for 34 years. He understood money in the way that people who work with public budgets understand it. Carefully, conservatively, with deep respect for what a dollar represents when you have earned it honestly. Eva. My mother was a school teacher. She retired at 62 and spent the years after that tending her garden and her church, and her relationship with Patrice, Ebel, which had always been the central relationship of her emotional life. I want to be fair to my mother. She is not a villain in the way people expect villains to look. She did not rub her hands together. She did not plot in the dark. She is a 74-year-old woman who loves her daughters with genuine feeling and has always loved one of them more, and she made the mistake of letting that preference become a financial decision she thought she could conceal. Patrice is 3 years younger than me. She lives 12 minutes from my mother's house. She calls every day. She was there when my father was sick, truly there, in the house, managing appointments, sitting with him through treatments, doing the hard daily work of caring for someone who is slowly leaving. I was not. I was in Memphis. I flew in on weekends when I could. I sent money when she needed it. I was present in the ways I could manage from 4 hours away. I do not think I failed my father, but I understand that my absence during those years created a kind of ledger in my mother's mind. A ledger I did not know existed until after he died. My father passed in March. He was 71. The illness had taken 18 months, and by the end it had taken most of what was easy about him. His patience, his humor, his capacity for the small daily pleasures he had always loved. What remained was the essence of him, the core, and that was what I sat with in the final weeks when I came and stayed. He died on a Tuesday morning. I was in the house. Patrice was in the house. My mother was holding his hand. That part was not complicated. That part was just grief. And grief at least is honest. The estate meeting happened 6 weeks after the funeral. My mother's attorney, a man named Gerald Tate, who had handled her affairs for years, and who I did not know well, ran the meeting at his office in Nashville. It was a Wednesday afternoon. Patrice was there. Gibor. I had driven up from Memphis. Gerald walked us through the assets. The house which my mother would retain. A savings account with $14,200, a small checking account. My father's pension, which would convert to a survivor benefit for my mother. 2 vehicles, and then Gerald said, "The investment account." My father had maintained an investment account for nearly 30 years. He had added to it steadily, through market cycles, through lean years and better ones. The last statement I had seen, at Christmas, when he had shown me the balance with quiet pride, had shown a value of just over $190,000. Gerald said the investment account had been substantially drawn down during the illness. He said end-of-life care was extraordinarily expensive. He said the remaining balance had been used to settle the final medical bills and outstanding debts. He said the current balance was $4,100. I looked at him. I said, "The balance at Christmas was over $190,000, he says. "A great deal can change in 14 months. I said, "What were the specific withdrawals, Gifine?" He said the estate summary he had prepared reflected the final balances, and that the details of the account activity during the illness were not typically part of an estate meeting. I said, "Abel, I'd like to see the account statements." Gerald looked at my mother. My mother looked at her hands. She said, "The medical bills were very high, Loretta." I said, "I understand that, Inithi. I'd still like to see the statements." Gerald said he would have copies prepared and sent to me. He said it in the tone of someone who fully intended to send them and was not concerned about what they would show, which meant either he genuinely wasn't concerned, because the account activity was legitimate, or he was a very good actor. I drove home to Memphis that evening, with my father's letter in my coat pocket, and a number in my head that did not match. $190,000 does not become $4,000 in 14 months on medical bills, unless the medical bills were extraordinary. And even then, I knew what my father's insurance had covered. He had good insurance. Municipal employees in Tennessee have good insurance. His out-of-pocket maximum was $7,500 per year, 24 months of illness. $15,000 maximum in out-of-pocket costs, on the high end. That left over $170,000 unaccounted for. I want to explain something about how I approach a discrepancy like this, because I think people imagine forensic accountants as people who are suspicious of everyone, who see fraud everywhere, who come to every situation already assuming the worst. That is not accurate, and it is not how I work. What I do is verify. I take a number that does not match, and I find the documentation that either explains it or doesn't. I do not assume my mother stole from me. I assume there is an explanation, and I look for it. I looked for it for 4 months. The investment account statements arrived 3 weeks after the estate meeting. Not by email, but by mail, which told me Gerald Tate was operating on his own timeline and was not in a hurry. The statements covered 18 months of account activity. The withdrawals were there. 13 of them, over 14 months. They totaled $183,000. I went through each one. 8 withdrawals corresponded to payments to medical providers, hospice services, and a home health agency, I cross-referenced them against the insurance explanation of benefits documents I had requested from my father's insurer. After insurance, his actual out-of-pocket responsibility on those claims was $9,200 across the full illness period. The 8 withdrawals totaled $41,000. The math did not work. The insurance had covered the majority. There was no explanation in the statements for why $41 0 had been paid to medical providers when the actual patient responsibility was less than $10,000. I noted it and kept moving. The remaining 5 withdrawals were not to medical providers at all. 2 were transfers to my mother's personal checking account, together $38,000. Made in October and December of the year my father died. 1 was a wire transfer to an account I did not recognize. Amount $61,000. Made in January, 10 months before the estate meeting, where my mother told me there was nothing left. One was a payment to Gerald Tate's law firm. Amount $12,000. One was a cashier's check, payable to cash, UP. Purchased in February. Amount. I added these up. 41,000 in medical payments with unclear justification. 38,000 transferred to my mother, Hebel. 61,000 wired somewhere in January. 12,000 to the attorney. 31,000 as a cashier's check to cash. Total, $183,000. The full amount that had left the investment account. Two numbers concerned me most. The $61,000 wire in January to an account I could not identify from the statement alone, and the $31,000 cashier's check to cash. I needed to know where those went. I retained an estate litigation attorney in Nashville. A woman named Frances Obi, who came recommended by a colleague and who spoke with the efficient directness of someone who had seen this pattern before. I gave her everything I had, the statements, the insurance EOBs, the withdrawal summary I had prepared, my father's letter. She read it all in one sitting and said, "The $61,000 wire is the key, everything else is explainable with some effort. The medical payments may be inflated, the attorney fees are high but not actionable on their own. The transfers to your mother's checking account could be characterized as living expenses. But a $61 zero wire to an unidentified account 10 months before the estate meeting where your mother told you there was nothing left, that requires explanation." She filed a formal discovery request as part of an estate dispute proceeding. The discovery requested full documentation of all financial transactions during the 18-month period prior to my father's death. Gerald Tate responded, through his own counsel, that the estate accounts had been properly administered and that all transactions were documented. Frances said, "Then they won't mind showing us the documentation." It took 11 weeks. But they produced it. The $61,000 wire had gone to a checking account. The account was in the name of Patrice Denise Sims. I have been in this work for 21 years. I have sat across from people who defrauded their elderly parents, siblings who concealed inheritance from one another, spouses who hid accounts during divorce proceedings. I have seen the range of what people do when money and family collide. I still sat with that document for a long time before I moved on. $61,000. Wired to my sister's account. In January, 3 months before my father died while he was still alive. While the investment account was still technically his asset, my mother had authorized the transfer. She had moved $61 00 from my father's investment account to my sister's personal checking account while my father was in the final months of his life. I thought about whether my father had known, whether he had asked for it, whether this was a decision they had made together. I thought about the letter in my coat pocket, each of his daughters. Equally. A foundation. I did not think my father had known. I also found, in the discovery documents, what I had been looking for, the gift tax return. My mother had filed a federal gift tax return. IRS Form 709, reporting a gift of $61. 0 to Patrice Denise Sims. The return was filed in April, 1 month after my father died. It listed my mother as the donor. It listed the date of the gift as January. She had reported it to the IRS. She had done the correct legal paperwork to protect herself from gift tax liability. She had told the federal government about the $61,000 gift to my sister. She had not told me. The annual gift tax exclusion at that time was $17,000 per person. The gift of $61,000 exceeded the exclusion by $44,000, which meant it reduced my mother's lifetime exemption. A technical but real financial consequence she had been advised about and had documented properly. She had done everything right, legally, even, to give my sister $61,000 from my father's assets while he was dying. She had done nothing right by me. Before I tell you about the cashier's check, The $31,000 one, payable to cash. I want to ask you something, Iba. If you have ever been the daughter who drove 4 hours for every holiday, who sent money when you couldn't send yourself, Ibi, who read every document and asked every question and tried to do everything right from a distance, you understand the specific quality of this particular betrayal. It is not just about money, Yi. It is about being looked at and found wanting, not in your capacity but in your proximity, not in what you did but in where you were. My mother had made a decision about value, about who had earned more, about whose life she wanted to support more fully going forward. And she had made that decision while my father was still breathing, using money that was partly his, partly mine, Hebel, to build my sister a foundation she did not think I deserved equally. She just didn't expect me to find the return. The cashier's check for $31,000, payable to cash, purchased in February, 1 month after the wire to Patrice, 2 months before my father died. Francis requested the cashier's check records from the bank. The bank produced a copy of the check and the purchase receipt. The check had been purchased by Gloria Ann Sims. My mother cashier's checks made payable to cash are difficult to trace once cashed. That is, frequently, the point of making them payable to cash. The bank could confirm the check had been cashed. It had cleared, but could not tell us, from their records alone, who had presented it. Francis said, Litha, we can depose your mother about the cashier's check. Under oath, she'll need to explain what the $31,000 was used for. I said, before we do that, I want to check something. Kyria. I had been doing my own parallel review, separate from Francis's formal discovery process. In the documents produced, there was a full copy of my mother's personal bank statements for the relevant period. I went through them looking for the cashier's check proceeds. They did not appear in her checking account. The check had not been deposited to her account. I looked at Patrice's account records, which had also been produced in Discovery. In February, the same month the cashier's check was purchased, Patrice's checking account showed a cash deposit of $30,800. Not $31,000. $30,000, $200 unaccounted for. Which is what you lose when you cash a $31,000 cashier's check at a check cashing counter that charges a fee. My mother had bought a cashier's check for $31, zero payable to cash, and my sister had deposited $30,800 in cash to her checking account 1 week later. I sat at my desk in Memphis with those two bank statements side by side, and I thought about my sister at my father's bedside, the daily calls, the appointments, the genuine sacrifice of those 18 months, and I thought, she was paid for it, not in gratitude, not in acknowledgement, in cash, from my father's account, while he was still alive, and I had been told there was nothing left. Francis scheduled the mediation for a Monday in November, 16 months after my father's death. It was held at a neutral attorney's office in Nashville, Bettine. My mother arrived with Gerald Tate and a separate attorney she had retained for the mediation itself, a woman named Susan Park, who was careful and measured, and clearly very good at her job. Patras did not attend. She had been named as a respondent in the discovery process, but had submitted a written statement through her own attorney, saying she had received the transfers as gifts from her mother and had no involvement in the estate administration. That was technically accurate. She had not administered the estate. She had simply received the money. My mother looked smaller than I expected. She had always been a large presence, commanding in a room, the kind of woman who enters and the temperature changes. That morning, she looked tired. She looked like a woman who had known this was coming and had spent 16 months trying to outrun it. I sat across from her, and I did not feel anger. I have been asked this many times since, were you angry? And the answer is that the anger had come and gone months before, somewhere in the middle of those 11 weeks of waiting for the discovery documents. What remained by the time we were in that room was something quieter and more permanent. a clarity about who my mother was and what she had decided about me, and a commitment to making the record accurate. Francis opened the mediation by presenting the full financial summary. The investment account, the 18 months of withdrawals, the $61,000 wire, the gift tax return, the cashier's check, the $30,800 deposit. Susan Park said, Mrs. Gila. Sims made gifts to her daughter Patrice during Mr. Sims's illness to compensate Patrice for the extraordinary caregiving she provided. These gifts were properly reported to the IRS and are within her rights as a co-owner of the marital assets. Francis said, Mr. Sims was still alive when the transfers were made. The investment account was held jointly. Co-ownership does not grant unilateral authority to make gifts of this size from joint assets without the co-owner's consent. Susan Park said, Mr. Sims was incapacitated during the final months of his illness. Francis said, he was incapacitated for the final 6 weeks. The wire transfer occurred 4 months before his death, Fury, during a period when his physician's records indicate he was cognitively present and capable of financial decisions. We will be requesting documentation of his consent to this transfer. The room was very quiet. My mother looked at the table. It was the same gesture I had seen my entire life when she was working out what to say. The way she looked when the answer she had prepared had met something she hadn't prepared for. Francis continued. We are also requesting documentation of Mr. Sims's consent to the cashier's check purchase in February. Mrs. Sims, did your husband know about the $31,000 cash transfer to Patrice? My mother said quietly. He was very ill. Francis said, that is not the question I asked. Another silence. Susan Park put her hand briefly on my mother's arm. She said, we'd like a short recess. They were in the hallway for 20 minutes. I sat at the table with Francis and drank water and looked at the window. Francis said, she's going to settle. I said, I know, she said, excuse me. The question is how much she's going to try to characterize as legitimate caregiving compensation. I said, Patrice did provide care. I'm not disputing that. Frances looked at me. She said, how do you want to handle the caregiving argument? I had thought about this for months. I had thought about it more than I had thought about the money, honestly. Because the caregiving was real. Those 18 months were real. My sister had given up time and energy and peace of mind, and she had been present in ways I was not, and that had value. Real value. But it did not have a value that was decided unilaterally, in secret, from an account that was supposed to be split equally. Without my knowledge or my father's documented consent, I said, I'm willing to acknowledge a reasonable caregiving offset. I've done the research. Professional home health aides in Nashville average about $22 an hour. If Patrice provided the equivalent of full-time caregiving for 18 months, which she did not, she had her own job and her own life. The reasonable value is somewhere between $30,000 and $45,000. Francis nodded. I said the total transferred was $92,000. If we acknowledge a $40,000 caregiving offset, the remaining $52,000 should be split equally as part of the estate. Half to my mother's estate to manage as she chooses, half to me. Francis said, that's $26,000. I said yes, she said. You could argue for more, I said. I know, I don't want more, I want what's accurate. E.T. When Susan Park and my mother came back from the hallway, Susan Park sat down and said, Mrs. Sims would like to speak to Loretta directly before we discuss terms. Francis said that was fine. My mother looked at me. She had been crying in the hallway. Her eyes were red, and she had the careful stillness of someone who has decided not to let the crying start again. She said, I know you're angry with me. I said, I'm not angry. She said Patrice was there every day. She drove him to every appointment. She slept on the couch for the last 3 months so she could hear him at night. She gave up, Mom. She stopped. I said, I know what Patrice gave. I am not standing here telling you it didn't matter. What I am sitting here telling you is that you made a financial decision about my inheritance without telling me, Evie. You moved money from an account that was supposed to be split equally while Dad was still alive. And then you stood in Gerald Tate's office and told me there was nothing left. She said, I didn't know how to tell you. I said, that's different from there being nothing to tell. She was quiet. I said, did Dad know about the wire in January? She looked out the window. She was quiet for a long time, and then she said, I told him I was taking care of Patrice. I said, did he know the amount? She said, he was tired, Loretta. That was the answer. He was tired. Male. My mother had told a tired, dying man that she was taking care of Patrice, and he had not asked the amount, and she had taken that as consent. I thought about my father, and his careful cursive, and his letter about equal shares, and a foundation. I thought about him in those final months, tired and trusting the woman who had managed his household for 46 years. I said, okay. She said, okay? I said, I would like to settle this today. I don't want a trial. I don't want depositions. I don't want this to go on any longer than it has to. Her eyes filled again. I said, but I need the record to be accurate. I need what was taken from the estate without proper authorization to be acknowledged and addressed. That is what I'm here for. She nodded. Evie. She pressed her lips together and nodded. The settlement was reached that afternoon. My mother agreed to acknowledge that the $61,000 wire and the $31,000 cashier's check, totaling $92, equals 0 un, had been distributed from the marital estate without documented consent from my father and without disclosure to me as an equal beneficiary under his estate intentions. She agreed to a caregiving offset of $42, slightly higher than my proposed figure, which I accepted, recognizing the genuine value of Patrice's 18th of care. The remaining $50,000 was treated as an undisclosed estate distribution. My mother agreed to pay me $25,000 from her personal savings account within 90 days, representing my equal share of the undisclosed distribution. Patrice was not required to return any funds. Her attorney had correctly argued that she had received gifts from her mother and had not participated in the estate administration. Whether she had known those gifts came partly from my share is something I cannot prove and will not speculate about in a legal document. I know what I believe. I have kept that belief to myself. My mother sent the $25,000 by wire transfer on a Thursday in February, 83 days after the mediation. Francis confirmed the receipt. I transferred it immediately to my own savings account, and I sat at my desk for a while afterward, not doing anything, just sitting. It is not $92,000. It is not even what a strict legal argument might have recovered. Francis had made clear that we had a reasonable case for a larger figure, that the gift tax return alone established the transfer had been deliberate and documented, and that the unauthorized use of joint funds during my father's incapacity was a strong legal argument. I did not want a larger figure. I wanted the acknowledgement. I wanted the record, even the private record of a settlement agreement, sealed and filed, to say what actually happened. My mother had made a choice. The choice had financial consequences for me. Those consequences were acknowledged and partially remedied. That is what justice looks like in real family situations. Not full restoration, not loud vindication. An acknowledgement, a correction, a record that is accurate. I called my mother 2 weeks after the transfer. I did not wait for her to call me. I called her on a Sunday, the way I always do, and we talked about her garden and her church and how my nephew was doing in school. She asked how I was. I said I was well. She said, I know I hurt you. I said, yes. She said, I don't know how to make that right, I said. You already did what you could. The rest is just time, she cried a little. I listened. And then we talked about what she was planting along the fence this spring, and the conversation found its way back to something ordinary. And we stayed on the phone for another 20 minutes, just being a mother and daughter who have a complicated history and are choosing, for now, to talk about flowers. I do not know what my relationship with Patrice looks like going forward. We were never as close as she and my mother were, and the distance between Nashville and Memphis has always served as a practical excuse for an emotional truth. We have not spoken since before the mediation. I do not expect her to call. I am not waiting for it, either. What I know about my sister is that she was there when I wasn't, and that matters. And I know that she accepted money she had to understand was not entirely hers to take, and that matters too. Both of those things are true at the same time. And I am old enough and experienced enough to understand that most family situations consist entirely of things that are true at the same time. My father's letter is still in my coat pocket. I have not moved it. I take my coat to the dry cleaner every spring, and I take the letter out and set it on my desk. And when the coat comes back, I put the letter in again. I know what it says. I have read it enough times that I could recite it. But I keep it there because it is the last thing he gave me. That was entirely his handwriting, his intentions, his voice in cursive on paper. Before anyone else got to it. Before anyone decided what it meant or whether I deserved it. He wrote each of his daughters. He wrote equally. He wrote foundation. The accounts did not end up equal. The foundation was uneven. But the letter exists, and the records exist, and the settlement exists. And somewhere in that combination of documents is the truth of what happened. Not the version my mother would have preferred. Not the version that remained if I had simply accepted the estate meeting at face value, but the actual version. The documented one. I have spent 21 years believing that the documented version matters. That the records are the truth when the people are telling stories. That if you follow the numbers long enough and carefully enough, you find what actually happened underneath what everyone agreed to pretend. My own family tested that belief in the most personal way it could be tested. The belief held. There is something I want to say to anyone listening to this, who is in the middle of a similar situation, who has been told there is nothing left, who has been handed an estate summary that does not match what they were promised, who is sitting with a number that does not add up, and a family that is telling them to let it go. You are not imagining it, The feeling you have when a number is wrong is not paranoia. It is pattern recognition, and it is correct, and you have the right to follow it. You do not have to be a forensic accountant to request documents. You do not have to be an attorney to read a bank statement. You have the right to ask for the investment account records. You have the right to request the estate accounting, either. You have the right to look at the gift tax returns filed during the period in question. These are documents that exist. They are accessible, and they tell the truth. The people who do not want you to look will tell you that you are being difficult, that you are making a painful time more painful. That grief is not the time for questions and family, is not a business transaction, and some things are more important than money. They are right that some things are more important than money. But money is how people make decisions when they think no one is watching. Money is how priorities are revealed. Money is where the truth goes when people are too careful to say it out loud. Follow the money. Read the statements. Ask the question twice. Hire the attorney. And do not let anyone on your family convince you that wanting what is yours is the same as being the problem. I closed my father's estate file last spring. Francis's office sent me the final document, the settlement agreement, filed and sealed. And I put it in a folder in the drawer of my desk, alongside 21 years of other people's cases. It sits there now, between a 2019 insurance claim and a 2023 probate dispute, filed the same way I file everything, clearly labeled, accurately dated, organized by what actually happened. My father would have found that appropriate. He was a man who believed in accurate records. He had worked in municipal finance for 34 years, filing documents that had to be right to the cent, because public money required public accountability. He taught me, without meaning to, that the record is the thing. That what gets written down is what survives. He was right. His letter is still in my coat. The gift tax return is in my file. The settlement is in the drawer. And the number, his number, the one he carefully saved over 30 years to leave equally to each of his daughters, is documented now. Officially, irrevocably, the accounts may not have been equal, but the record is. I want to go back to the investment account statements, because I moved through them quickly earlier, and the details matter. When Francis received the full discovery package, there were 47 pages. The statements themselves, the medical billing records, the insurance, EOBs, the wire transfer documentation. Gerald Tate's billing records, which showed $12, zeros in fees over 15 cents. A number that was high for a routine estate, though not outrageous for one that apparently required significant document management, either. I sat with those 47 pages for 2 full days before I prepared my summary for Francis. The medical payment withdrawals, the 8 that I mentioned, were the most complicated to unravel, because they required cross-referencing across 3 separate document sets. The investment account showed the withdrawal amount. The medical billing records showed what was billed, The insurance EOBs showed what insurance had paid and what remained as patient responsibility. Here is what that cross-reference produced. In plain terms, my father's investment account paid $41, to medical providers over 14 months. His insurance, a comprehensive plan through the Tennessee Municipal Employees System, had covered an average of 83% of his medical costs. His total billed charges across the illness period were approximately $67,000. Insurance had paid $56,000 of that. His patient responsibility, co-pays, deductibles, the portion not covered, was $11,000. Insane. The investment account had paid $41,000 toward medical bills that required $11,000 in out-of-pocket beans. The remaining $30, $00 in medical payments had gone somewhere in the medical billing process that the documents could not cleanly account for. Francis said this was a secondary issue. Possible overpayment to providers, possible allocation errors, and that pursuing it would require a separate audit of the medical billing records that would cost more in legal fees than it would likely recover. I agreed. I noted it and moved on, But I want you to understand the full picture of what that investment account had been used for. Because it was not one thing. It was a series of things, each one individually explainable, collectively forming a pattern of an account being deliberately drawn down to near zero over 14 months, while the account holder was too ill to monitor it. 30,000 in medical billing discrepancies, 38,000 to my mother's personal checking, 61,000 to Patrice, 31,000 as a cashier's check, 12,000 to the attorney, My father had gone to the hospital in the fall with a $190,000 investment account and a letter he had written to his daughters about equal shares. He had died in the spring with $4,100 remaining. He never knew. I am certain of that now. Not because I want it to be true, but because the documentation supports it. His physician's records from the final 4 months showed a pattern of increasing sedation and decreasing cognitive engagement. He had not been reading investment statements. He had not been tracking withdrawals. He had trusted my mother to manage the money while he focused on the diminishing business of staying alive. She had managed it. Just not in the way he intended. There is something I need to tell you about Gerald Tate. I had assumed, in the early months of this process, that he was complicit, that he had helped my mother structure the transfers, advised her on the gift tax return, and managed the estate meeting in a way designed to minimize my ability to ask the right questions. The discovery documents told a more complicated story. Gerald Tate's billing records showed that he had been retained by my mother 14 months before my father died. before the investment account had been substantially drawn down. His initial engagement had been routine estate planning, updating wills, reviewing beneficiary designations, discussing the house title. His billing records also showed a specific entry, Ibni. 11 months before my father's death. Advised client, gift tax exclusions and reporting requirements for large transfers. He had told her how to do it legally, EP. He had told her about the gift tax return before the wire transfer happened. He had advised her on the mechanism she used to give my sister $61, Ibram, in a way that would be reported to the IRS, and therefore legally defensible. That is not illegal. That is an attorney doing his job, Yibel. A client asked him how to make a large gift, and he told her how to do it correctly under the tax code. What he did not do. What he had no obligation to do under a narrow reading of his duties, EB. But what any ethical advisor should have done was tell her that making a $61,000 gift from joint assets without her husband's documented consent was legally and morally problematic. He advised her on the tax mechanics. He did not advise her on the ethics. I did not name Gerald Tate in the mediation, carefully. Francis had counseled against it. His exposure was limited, and pursuing him would have complicated and extended the proceedings without meaningfully increasing my recovery, EB. But I want you to understand that the people who enable these situations are not always the people who take the money. Sometimes they are the people who make the taking technically possible, EBL. Who answer the questions they are asked without asking the questions they should ask. Who look at a 73-year-old woman with a dying husband and a clear preference for one daughter and say, People defien. Here is how the paperwork works. The paperwork works exactly as the people fjout intend it to work. One more thing happened during the discovery period that I have not told you about yet, Eber. When Francis received the discovery documents, there was a piece of correspondence that had been included, I believe accidentally, because Susan Park sent a follow-up email asking for it back, which Francis declined. It was an email chain between Gerald Tate and my mother. From the January when the wire to Patrice had been sent, my mother had written, the wire went through, Gil. I want to make sure this is fully protected before Chester passes. When should we do the second one? Gerald had written back. The second transfer will need to be handled differently to avoid additional gift tax reporting. I'd recommend the cashier's check approach we discussed. Call me the second one. The cashier's check was the second one. $31,000, purchased in February, deposited as cash into Patrice's account 1 week later. My mother had planned 2 transfers. She had asked her attorney how to structure the second one to minimize the paper trail, and the attorney had told her to use a cashier's check payable to cash, which produces a single bank record of purchase but makes the ultimate destination difficult to trace. She had not planned poorly, She had planned quite carefully. The planning was what made it land the way it did, not as an act of grief or confusion, but as a decision that had been made deliberately, advised professionally, and executed in 2 coordinated steps while my father was still alive and I was in Memphis not knowing any of it. Frances used that email in the mediation, She placed it on the table when Susan Park began characterizing the transfers as spontaneous expressions of gratitude for caregiving. The email said, the second one, 2 words. But they carried the whole story, Susan Park asked for a second recess after the email was placed on the table. This one lasted 35 minutes. When they came back, the settlement conversation moved quickly. I want to say one more thing about Patrice, because she has been in the background of this story, and I do not want to leave her there without honesty. My sister is not a stranger to me. She is 3 years younger, and we shared a bedroom until she was 13. She used to climb into my bed during thunderstorms when we were small, and I would tell her it was just noise. She cried harder than anyone at my father's funeral, harder than my mother, harder than me. She had earned that grief. She had been there for it, daily, in a way I had not been. When I think about Patrice receiving that money, the wire, the cash, I believe there are two true things simultaneously. I believe she understood it was a gift from our mother, Yi. And I believe she did not ask carefully enough about where it came from. I believe she knew our mother had preferred her, and she accepted that preference in its financial form, without examining it too carefully, because examining it would have required her to acknowledge that the preference had a cost to someone else. That is not the same as stealing. But it is not the same as innocence either, She and I will have to find a way to be sisters again, or we will not. I do not know yet which it will be. I know that I called her once, 2 months after the mediation, and left a voicemail that said simply, Yile. I don't blame you for being there. I blame the situation for what it asked of you. She did not call back. Maybe she will. Maybe the silence will become permanent the way some silences do. I cannot force it either way, What I can do is leave the door open and not pretend it is already closed. My father would not have wanted us to stop being sisters. He wrote each of his daughters in that letter, which means he was thinking of us together, as a unit, as the thing he was leaving behind, that mattered most. He would not have wanted his money to cost him. That I think about that sometimes. That in trying to provide for us, he set in motion the thing that divided us. Not intentionally. He had no way to know. He trusted my mother with the account, and he wrote us a letter, and he died thinking he had done what he could. He had done what he could. It was enough to leave a record, and the record was enough to find the truth. That is, in the end, all any of us can do. Leave an honest record. Trust that someone who loves accuracy as much as we do will follow it to where it leads. I filed the last piece of paperwork in March. 11 months after the mediation, 2 years and 1 month after my father died. The estate was formally closed. The settlement was recorded. The account was zeroed. I went back to work the following Monday morning. I had 3 active cases on my desk. An insurance fraud matter, a business partnership dispute, Maine, and a new estate case referred by Francis involving a woman in Chattanooga whose brother had been serving as executor for 4 years without distributing the estate. I sat down at my desk, opened the new estate file, and started at the beginning: account balances, withdrawal history, beneficiary designations, transfer records, the same work I have always done, the same work I will always do, because the truth is always in the documents, and the documents are always there, for someone who knows how to read them. My father worked 34 years filing documents that had to be accurate, because public money required accountability. His daughter does the same work. She just does it for different reasons now. If you believe the truth always shows up somewhere in the records, subscribe before the next account is opened. She told me there was nothing left. She just forgot that the IRS always gets a copy.